Thank you, Ramraj, and thank you, Amit, for joining us today. Welcome, everyone, to the first roundtable of Day 5, the final day of India Impact Investing Week, Prabhav 2020. What an exciting week this has been, indeed. I am Neha from the ISC team, and it is my pleasure to welcome all of you. As Mr. Sunil Kant Punjal, the founder of Hero Group, during his keynote at Prabhav yesterday, said, impact investors bring access to opportunity. With this positive note that stuck with us, we bring to you a roundtable discussion on healthcare in impact. Healthcare has seen a cumulative investment of 1.1 billion US dollars in 85 enterprises over the last 10 years in India. We have a group of illustrious panelists here to discuss key imperatives in this sector. For example, healthcare finance. How do we build customized solutions for health service providers, manufacturers, and innovators? And also to understand how COVID-19 has been a turning point for the health tech solutions. It is my pleasure to introduce our eminent speakers of the day, post which I will hand over the stage to our moderator. Going around the table alphabetically, and if I could request the panelists to do a little wave as I introduce you. First on the panel is Ashish Aluwalia, co-head Consumer Healthcare Food and Agri CDC Group. Then we have Bhuvan Srinivasan, Director KKR. Next with us is Charles Anton Jansen, co-founder and managing partner Coyson West. We are also joined by Yore Dingmans, manager partner private equity, funds and co-investments from OFFMO. Next we have Karthikeyan, Deputy Vice President Vivriti Capital. We are also joined by Dr. Neeta Rao, Senior Health Specialist, USAID India. Then we have Pompey Sridhar, Director India, MSD for Mothers. Next we have Ranjit Menon, Executive Director, Curated Ventures. Our final panelist is Varun Javeri, Officer on Special Duty to the CEO of National Health Authority, Government of India. Last but not the least, I would hand over the stage to the moderator of this session, Himanshu Sikka, Chief Strategy and Diversification Officer and Lead Health, Nutrition and WASH, IPE Global. Over to you, Himanshu.
Thanks a lot, Neha, and a very warm welcome and good evening to all the panelists and colleagues in the audience. It's indeed a pleasure to have all of you here to have discussions on, I think, one of the most important topics of the year, healthcare. And to be able to gather in a forum like IIC and discuss that and how we can kind of see the emerging opportunities out of the COVID-19 space itself is a great opportunity. Now, while the topic is huge, given the time frame that we have today, our focus is going to be looking at the healthcare technology space as well as the healthcare financing space that can enable that, and how the COVID-19 pandemic that has affected all of us can actually be seen as an opportunity for the much needed disruption that the sector requires. Without much ado, I would kind of share a few slides to set the context for the discussions today, and then we can get into the discussions with the panelists that we have. So, if we look at the healthcare space over the last decade or so, the country has been improving. The indicators have been improving, whether it's MMR, IMR, or we look at the health infrastructure at our villages or in rural areas, they all have been improving. But at the same time, the situation remains very, very bleak. If you look at the numbers, roughly around 40 million people are thrown into poverty every year due to the health related expenditure, and reasons for that remain plenty. For instance, India still contributes around 21% of the global disease burden. If we look at the infrastructure within the country, our numbers are much lower than the WHO guidelines. We are still 81 doctors per 100,000 population. And there is a large dependence on the private sector, with almost 75% of the population lacking quality healthcare. The private healthcare sometimes come for the rescue, but in a way also leads to high out-of-pocket expenditure given the low insurance coverage within the country. Government has been doing a lot in this area with the Ayushman Bharat PMJY coming in and expanding the insurance coverage. However, still the GDP expenditure remains dismal at 1.6%, and at the rates it's been growing, it looks unlikely that we will reach to the 2.5% target that was set for 2025. And with the COVID pandemic, that gets further impacted because, as per the recent RBI estimates, there is expected to be a 9.5% contraction in our GDP numbers in the current year. So that's going to definitely have further impact. When we look at COVID-19 itself, as everybody knows, it has thrown towards a number of new challenges. While to some extent we have been able to spruce up our infrastructure and manage the case loads. India globally has the amongst the lowest death rates when it comes to COVID, and the doubling rate has also been increasing over the period. But still, the real test I think so lies ahead of us when actually as the cases increase in tier two, tier three cities, how the health systems and health infrastructure in these places and rural areas will cope up with the COVID-19 pandemic will be the real test of India's success or failure in this space. And moving forward, it's not that in India does not have the market opportunity or we don't have the key drivers which are necessary to build health infrastructure. If we look at the way the country has been and the economy has been growing over the years, the incomes have been increasing, the urbanization rate is amongst the highest globally, and the technology penetration that we have is kind of unparalleled. And in some ways, these factors have helped us to encountering the COVID-19 pandemic as well. And looking at the government policies and the support systems that have been put over the last decade, be it Startup India, Digital India, or Ayushman Bharat, uh, all has enabled private investments and impact investments have been on the rise in the country. However, having said that, the country still has over 600 million underserved with capacity to pay, and with the number of startups that we have, we are still only reaching 80 to 100 million of those people. So, still roughly around 500 million still remain unserved who have the willingness and capacity to pay for health services. Uh, Specifically looking at the healthcare space as well, there has been vibrant innovation culture in the country, but the fact has been that only few have been reaching to scale. If we look at a slightly dated data of 2018, out of the 3,000 plus companies that got founded in the healthcare space, only 10% ever got funded, and only 50 odd reached the growth stage or could scale up their operation to a some level. And it's within that also there is a kind of a asymmetry. While the number of 1.1 billion Neha mentioned earlier, going into 85 social enterprises, but that's a very small number when you compare to that overall the for-profit healthcare providers were able to the top 10 were able to raise over 2 billion in resources. There is this asymmetry that still lies when it comes to impact investing in the health space. And there are a number of reasons that we will kind of discuss during the panel discussion. But broadly speaking, it starts with lack of adequate financing in terms of the right mix of financing available for the startup community, especially social enterprises, to issues around procurement, then the procurement systems in the public as well as the private sector, issues around lack of incentive to adopt innovative practices, and generally speaking, kind of overall information asymmetry. A lot of startups or health innovators that you come across are kind of struggling to understand where to go or where to approach the right players to get funding. So overall speaking, there is a need to kind of catalyze investments, and that requires a multi-stakeholder approach and partnerships to drive innovation and transformation. Luckily for us, today's panel, we have representation from almost all kind of stakeholders that are required for these kind of initiatives, be it the philanthropies, the corporates, bilaterals and multilaterals, PVC firms, as well as, of course, the government. And all of these stakeholders need to come together, kind of to mobilize the resources required to meet the kind of challenges that we face, and come together also to identify new approaches, be it blended finance approaches, bringing the right mix of debt, grant, equity, which is made available to the innovators, and also try and help address the overall ecosystem challenges. In the last few years, we have been, the country overall has been moving in that direction, be it the social stock exchange or the social impact funds, the alternate investment funds that have been created, as well as new initiatives during the COVID time, like Kavach and Act grants, or Samred, which is the blended finance facility being set up with support from USAID and in collaboration with NHA, which are trying to address some of these concerns and bringing together the different stakeholders on a single platform, which can then enable the, the, the promotion or the right kind of financing being available to the healthcare tech and other companies in the ecosystem. So maybe to kind of start the discussions, what I would kind of and over the panel discussion, the idea would be to look at three broad areas. One would be whether India is now ready for the long-awaited tech revolution in the health sector, and has COVID-19 kind of brought us to that turning point. We've already seen the kind of initiation of the telemedicine or use of other technology innovations in this space. Look at that aspect, and also look at how has COVID-19 impacted investments in the healthcare overall, and how have the rules of the game changed. And lastly, what kind of new models or customized solutions we can kind of think of for the different players in the healthcare space, service providers, manufacturers, and innovators to address these challenges. Uh, in order to kind of initiate the discussions, maybe may I ask and start the discussions with Mr. The, you, in terms of what are the kind of emerging trends in your work at Merck that you come across in the technology space and healthcare, and how do you see those kind of enabling your projects or other projects in the ecosystem to provide affordable and quality services to the poor and the needy?
Hi, thank you. So for us at MSD for Mothers, Merck for Mothers, as it's called in the US, our focus is really on combating preventable maternal mortality. And we've been supporting innovations and partnerships in health technology right from the beginning. But I must say that, our pillars of funding have in the beginning grant, and then it's kind of a mixture of grant, impact investment, the first maternal health bond that you've seen in Rajasthan, all the way to the debt and equity and all of those kind of instruments as well. So we start with grants. Once a solution is kind of solidified and seems to be working, we move to supporting it in a manner that we can help create markets or minimum viable products for it. So the connection with the market that is served by insurance, by UHC schemes like Ayushman Bharat are very, very critical. And I think that we see as the key missing link. So the role really of philanthropic capital is also to kind of work together with public funds as well as commercial capital to make this happen. How can some of these solutions really be integrated into the health system so that the private sector can complement the government in a manner that every individual get affordable healthcare? And this is for some reason not happening in fast growing economies, which for some reason don't seem to be investing enough in health. And that's the reason that there is a case for commercial investment. We've seen technologies like telehealth, etc., take off, and not just that. The pandemic forced all our partners and all our solutions to go totally virtual. So, digital is one of the core principles that govern all our investments. Data has to be visualized. We should be able to know at any given point in time where we are, what's happening, etc. Because we believe that data divides the rich and the poor. and data divides who's going to be healthy or not. And so, since digital is the core, I mean, we figured out that all of our programs rapidly kind of started to uptake digital content, digital platforms, and different ways and mechanisms to deliver digital content to folks. One of our investments is Echo, which Merck brought to India about 4 or 5 years ago, and to Vietnam as well. And Echo has been transformational in kind of being used for virtual clinics, etc. And so we have seen now several such platforms come up that we all use. Similarly, a lot of apps that we have been using have seen rapid uptake, right from UN organizations to commercial organizations who are using these apps for blended learning. So all these were concepts earlier, but it's a reality. And what we've seen is the initial myth was that when you go virtual, it may be like distance education and the quality might be compromised. But we saw on the contrary, the quality actually improved because we could really connect the key resources to the hard to reach areas, people, etc. So we believe that the divide, the reach issue has largely been solved. The transaction costs have come down. Many more businesses are able to sustain, and therefore we believe that this is the transformational, pivot that we were really waiting for, and it's now going to be on the upward from here on. Thanks.
Thanks. That's a very interesting perspective that you brought. That how going digital has kind of bridged the gap between the divide and reach that one used to face earlier. That's very kind of, and that's been true. And solutions like Echo, everybody has seen has kind of improved the reach to a larger population. And you also pointed out how the philanthropic capital has been able to work with the private sector and the private capital. Maybe I will kind of expand that discussion point, and Dr. Neeta Rao, I would kind of request your view in terms of partnerships besides the philanthropies and the corporates and the government. You kind of come from USAID, a major bilateral partner with Government of India. What's your perspective on the partnerships and what kind of work USAID has been initiating in this area? Would be good to understand that.
Thank you, Himanshu. So this First of all, I would like to state that you have set a very good context through your presentation, where it clearly highlights that the problem of healthcare system in India is largely on the supply side rather than on the demand side. So if we look at our population in India, we are largely a younger population. And by 2021, 34% of this population would be in the age group of 15 to 35 years. So we have a huge demographic dividend, but we cannot reap the benefits of those demographic dividend because we are facing triple burden of disease, which is communicable disease, non-communicable disease, and also reproductive health issues. So there is clearly a huge demand for services, and that would be on a prolonged basis. Well, we look at on the supply side, and very clearly through your presentation, you have shown that healthcare spending is very low in India, and we are facing poor health infrastructure. We are also importing a lot of medical devices, despite being a hub of innovation in our country itself, because we are not investing enough on research and development, and for decades, this has been very low to almost about 0.7% of GDP. But having said that, there are huge opportunities to actually bridge this gap between the supply and the demand, and the answer for that is only partnerships. So on one end, we have seen that government has ramped up services, has been really putting a lot of efforts, and has really well in terms of strengthening public health systems, and the development partners, the private entities, including corporates, impact investors, financial institutions, have all come together to support the public health system and also boost the small, medium enterprises that can provide solutions for the COVID-19 pandemic. And again, going back to your presentation, you have shown how we have a vibrant private sector, and also going back to what Pompey mentioned, we have a vibrant private sector. But the challenges of really utilizing all of these opportunities to meet the development and the health requirements of the country are largely three. One is mobilizing resources for high impact solutions. Two is sustaining them and scaling them effectively. And the third important challenge area would be to ensure that they actually meet the requirements of the system and also meet the end users' requirement, like the beneficiaries. And largely, it's the base of the pyramid population. And as Pompey earlier mentioned, that the digital solutions are really trying to be like a promising solution in this regard. So again, coming back to the main issue of individual stakeholders have only limited resources and limited reach. And therefore, the difference that they can bring about would never be substantial and sustainable. So partnerships is the only way to address the complex healthcare issues in India. And USAID has done a lot of work in this space, and I'm happy to share more details on that.
It will be useful if you could share a few examples of the models that USAID has been looking at for bringing different stakeholders together, because that, as you rightly said, is the key requirement in the current scenario. So some light on that would be useful.
Right. As most of us must be knowing, that USAID has a very strong and a long-standing presence in the development sector in India, and this has been not only with the government across different levels, but has also been with the private sector and with the civil society groups. So we largely look at ourselves as thought leaders and as catalysts to convene the private sector as well as the government to a platform so that we can bring about multi-stakeholder alliances, and that can actually attract a broad range of partners from the public and the private sector. What we have seen in the past is that there is a lot of verticalized approach. So this could only be addressed when we actually engage more into strategic level partnerships, and that actually has helped mobilize resources as well as solutions for a broad range of issues, broad range of challenges. And the government of India, if we look at the solutions that they have provided, has been amazing. For instance, the health technology assessment, that's very critical to assessing and evaluating innovations. There's also a first loss guarantee that is being provided to MSMEs, but these are only sort of limited solutions, and therefore the need to have different partners coming together. The only way to do this is, when we have multi-stakeholder alliances with expertise that each of them can bring together.
Thanks a lot, Dr. Neeta. And that you brought clear also a very key point, and the role that government plays in facilitating stakeholder interactions, as well as looking at the health technology space, be it through the health technology assessments or providing the financial support directly to the innovators. So maybe Varun, I would come to you as part of NHA. NHA has been in forefront through its different programs, be it Ayushman Bharat or the other initiatives. So how has NHA been looking at technology and leveraging it to look at universal health coverage being achieved? Some light on that would be great.
Sure. Thank you, Himanshu, for firstly setting up the great context. I think, when it comes to the role of the government, and if we look at what has happened in the last, 5 to 6 years, I think the government has really started leveraging very extensively the importance and the role of technology in delivering healthcare. And I can talk about various programs, but I would like to definitely mention about what has happened with the Ayushman Bharat Pradhan Mantri Jan Arogya Yojana, which was launched just before a couple of years. Covering more than 50 crore Indian citizens, being the world's largest healthcare program. I think the real backbone of the implementation, it lies within the whole technological ecosystem that it leverages. So the entire scheme is completely cashless and paperless. When we look at any particular stakeholder, whether we are looking from beneficiary, if I want to get, my e-card generated, or whether I want to get a treatment done, everything happens through a digital platform. When I look at from the hospital's perspective, filing a claim, getting a reimbursement, again, everything through a digital system. So the fundamental, concept of digitizing the processes, it first of all enhances the overall operational efficiency, and it has brought a lot of, accountability in the systems. Earlier, there used to be, times wherein hospitals, they used to get, payments delayed by several months. I think that is one very big, challenge that Ayushman Bharat is curbing, and this has really resulted in building a lot of trust, not only in the public sector but even within the private sector. Then if you look at other components, like, when we are countering fraud and abuse, how we are using extensive, data for monitoring the type of progress of the scheme, we can see that Ayushman Bharat is a great example of how, one can actually use technology for bettering the healthcare delivery. And I think this is something that is, going to be taken forward towards our journey towards the universal health coverage. Right now, 40% of the citizens are getting covered. So, the idea would be, can we explore more models to, enhance such type of coverage in the future? But the idea is that, how can we have technology as a cross-cutting theme in delivering that? At the same time, I think one key aspect that I think even Neeta mentioned is that now the challenge and the fault lines have really started appearing in the supply side. When it comes to the healthcare infrastructure, when it comes to the availability of doctors. So the idea is that how can we catalyze more of, such type of public-private partnership? How can we catalyze more private capital in the healthcare to, to build this supply side infrastructure, and cement some of the gaps that we are seeing. And I feel that, we have been embarking upon some of the very interesting partnerships with regard to, enhancement of technology, with regard to, being a part of the multi-stakeholder alliance. Because the idea is that, once the government is a part of the alliance, it brings a lot of, sort of the accountability and credibility on board. So the idea is that, how can we be a part of such alliances to actually improve the supply side, infrastructure which is there. So, we have been involved extensively in some of those projects, and I'm happy to share more details about that.
No, it's interesting, Arun, the points that you bring around sprucing up the supply side infrastructure, as well as the benefits of digitizing the system that have come in. We also keep hearing about the National Digital Health Mission coming up, and NHA is taking lead on that as well. Plus the other sectoral programs or schemes which traditionally used to face delays and had that trust issue, be it CGHS and all, also possibly in future getting combined with Ayushman Bharat in some ways. So, how do you see technology shaping up the future interventions that NHA is working on, or government at large is working on?
Well, I think there is a lot of learnings that, the healthcare ecosystem needs to take from the, how the fintech ecosystem has evolved. If you look at the government's approach in, how they created a lot of public digital infrastructure in the financial ecosystem by creating, the JAM Trinity. I think a similar sort of, a fundamental infrastructure is being created even in the health system, and that is what, that is how the entire idea, started with regard to the National Digital Health Blueprint, which prompted up, the National Digital Health Mission. So the idea resides in the fact that, how can we make the fundamental, health infrastructure right? The idea is not to, make end-to-end services for citizens, but the idea is that how can we set up the right fundamentals, just like how we have the JAM Trinity, on which, then you can make a lot of citizen-related services. And I think NDHM is an effort in that particular direction. The idea is that, how can we first of all have a unique identifier for citizens, which is a health ID. The second is that, how can we have, a verified registry of healthcare facilities, because, even after 70 years, we still do not have the answer to, how many healthcare facilities are available in India. So, of course, a lot of efforts have been made to that. But the idea is that how can we streamline that? So, that we have the healthcare registry. The third, which is, quite a, big challenge, is with regard to, the availability of doctors, and that to verified doctors. When we go to the rural pockets, there is a surge of doctors with, extremely unreliable credentials. So due to that, the entire quality of healthcare, it suffers. So that's how we are making this verified registry, or called the DigiDoctor. And the fourth one is, how to streamline the entire citizen's journey to the medical healthcare facilities, and how can a citizen actually store the personal health record. So that is the fourth component of the personal health record. And I think on top of it, there would be various services which we will build, such as teleconsultation, e-pharmacy. So a lot of that, the public digital goods is actually getting catalyzed, by the National Digital Health Mission. And I feel that the government can perhaps be responsible for building this core module building blocks. But if this mission has to be really scaled, there is an extensive need for the involvement of private sector to come together and work in taking forward this particular NDHM. At the same time, even in Ayushman Bharat, just within 2 years, we have provided free treatment to more than 1.3 crore citizens. So the type of scale at which the scheme is working, that is quite immense. And we understand the importance of bringing technology, bringing innovation. And just before a couple of weeks, the Honorable Union Minister has launched the Market Access Program, which is an initiative to support a lot of startups, to support a lot of disruptive technological innovation, which can actually go into 23,000 plus hospitals which are there in our network, and can help improve the quality and the access to the healthcare. And I'm really glad that we are working with a lot of stakeholders in actually realizing that particular program. So I think the government, with whatever mandate it has, I think I've seen a sort of a alignment and a sort of curiosity to actually go out there and take up projects of large scale. But I think to actually take them to the last mile citizen, I think there is a huge involvement of private sector, and we need support both from the technical side as well as from the private investment side. And that is the reason why I feel this discussion is extremely important to understand what are some of the incentives, what are some of the requirements, where does the private sector want to see itself in the healthcare, and how can we formulate such type of public private partnership to ensure that the healthcare delivery and the access to the healthcare delivery that we have been thinking of improving can actually become a goal that we can realize. So I think when we talk about the universal health coverage, of course Ayushman Bharat is a big disruption. NDHM is going to be I would say a bigger disruption. But I think to actually take them to the ground and to achieve that type of success, the involvement of private sector is very critical.
Thanks a lot, Varun, for laying out so well the kind of efforts and initiatives government has been taking and plans to take up, and also the level of private sector involvement, be it on the technology side or on the investment side that the government is looking at. And that sets very well the way that we wanted to kind of take the discussion forward. And that brings me to you, Ranjit. And Cherate Ventures has been working and looking at the healthcare space closely over the years. So, how do you see the government initiatives and the overall scenario in the healthcare space changing over the years? And how is your investment paradigm changing, or is it not changing? And what are the future trends that you see in that space?
Sure. Thank you very much for having me here and setting up a good context, Himanshu. So, I mean, we are a fund that invests in technology. We're a technology-focused fund. And if you look at the course of the last 10, 12 years, we've invested close to $140 million into healthcare specifically. And this is across, devices, biomaterials, and digital health platforms. Right, and one thing that is very, very clear, and Neethan and everybody else kind of alluded to it, is digital health is kind of emerged as like the almost like the saving grace in the midst of all this challenges that we're seeing globally, right? And it's not like the digital health platforms were not there earlier. Right. What we're seeing very interestingly is the fact that the adoption of the practitioners, the clinician community, the adoption of digital platform has gone significantly in the last 6-7 months. Again, I mean, going back to your presentation, you had like 0.6, 0.7 doctors to 1,000 people population. I mean, that's a huge gap, right? That is at a doctor level. If you start looking into specialties, that number is even more skewed, right? And what doctors have figured out in the last 5-6 months is for them to reach patients, it is important to kind of adopt digital technologies, which was not something that they were very gung-ho about earlier. And so I think that is a clear winner from our side. And if you just look at the data that is published by American Medical Association, I think televisits have gone up by 50%, remote care has gone up by 35%, remote monitoring platforms engagement has gone up by close to 40%. Even in India, I mean, we've got a company called Healthcare, which has close to 4,000 doctors on the platform. The engagement of the doctor community on that has gone up by more than 300%. So clearly, you will see this, that the digital platforms are getting more and more engaged, and adoption is increasing significantly. So I think for us as a fund, when we look at it, our investment thesis is moving more and more towards software-led and digital platforms. This is a clear trend. I mean, when we started, we had invested into medical devices, biotech, and so on and so forth. But one of the learnings, if you look back at this, is the supply chain of capital associated with medtech. Again, I mean, healthcare is a very, very vast ocean in this. If you take medtech, which is to do with medical devices and technologies associated with it, the supply chain of capital is fairly limited. Right? If you look at all the money that has gone into healthcare, I mean, there's a significant amount of capital that's gone in over the last 5-6 years, but most of that money has gone into healthcare infrastructure, whether it's private hospitals, diagnostic centers, and so on and so forth. There's very little that's gone into health tech and med tech, and that's fundamentally because I think there are not many investors who understand the technology aspects of this. And also, given the framework, the nature of the business, it takes longer. Regulatory clearances, clinical trials, and so on and so forth. So it takes much longer for some of these companies to kind of completely play out, which is why supply chain of capital is fairly limited. And from our side, the way we're thinking about it is moving more and more towards digital platforms. Like I said, we've invested close to $150 million in this space. Those companies have gone on to raise more than $1 billion, $500 million actually, over the last few years. But most of it has come onto digital platforms, and we believe that that's the way to go. The second aspect of this is, technology such as artificial intelligence. I think that's another area that is emerging, significantly, and more importantly, being accepted by the regulatory folks. We've seen FDA clear a few AI platforms. So that's an area that we think will have a significant impact. Again, the important thing here is to note that the idea here is not to replace the doctor, right? I mean, doctor will always continue to remain at the center of healthcare delivery, but clearly trying to see how we can augment his ability, his productivity, clinical outcome, improve clinical outcomes using AI technologies. I think that's another area that we're very, very interested in. And one last area that we think is emerging very interestingly is small devices that are home based, right, or consumer devices around health, which helps people monitor themselves, help remote engagement, remote monitoring, and so on and so forth. So I think those are 3-4 areas that as a early stage tech fund that we are very, very interested in and looking to support. And I'm happy to look at anything anybody doing in this space to see how we can work together.
Ranjit, if I can just have a small follow-up on the point that you mentioned. So, is your investment thesis more driven by the regulatory challenges that you face in other kind of interventions? Is that one of the key reasons, or are there reasons beyond that also that, or is it purely the nature of these businesses which can scale up very fast with the kind of limited kind of investments required that drives investment?
Yeah, the regulatory overhang does play a role, Himanshu, in our investment decision, because we're a 10-year asset class. So there is a certain time period in which the company needs to scale. We need to exit. I mean, so there are a bunch of associated stuff, and if there are areas that are absolutely uncertain with respect to clearances, registrations, clinical trials, the complexity and the risk on the investment significantly increases, right? Which is one of the concerns. Having said that, like I said, we've been consistently investing in devices, and we've figured out areas. I mean, there are FDA takes much more longer, CE takes a little bit less longer. So I think we are also learning with these frameworks to figure out how early stage companies can navigate this landscape to kind of grow. The other piece that we think is interesting is a vertical model where the discovery is digital led and there's an assisted offline delivery in a vertical framework, right? And that I think is an interesting model because you can help people because of the challenges in terms of access get doctors or specialists on digital platforms, but then have an assisted model which helps them in the offline delivery. I think so. There are models that is a combination of physical offline presence plus digital discovery, which is from a healthcare delivery perspective. And while on the tech piece, whether it's AI, whether it is devices, we continue to look at it while very, very clearly understanding that the lead times on these are fairly longer compared to the rest.
Thanks.
Hey, Manchu. Hey, Bhuvan here. Sorry to interrupt, but my first job was an R&D scientist at Medtronic. So, and then I became an investor after that. So regulation, I agree with you, Ranjit. But the fact is, regulation is there anywhere in the world, right? These are things that go into your body. By and large, they will be regulated. But some places have more innovation and some places have less innovation. I think there are the few issues that we face, at least when we look at investments. The first one is that the size of the Indian healthcare system, I know it feels vast, but actually it's pretty small, right? And I'm going to compare it to the US, which is an unfair comparison because the US spends more than anybody else in the world. So it's the wrong comparison, but just humor me. The size of the US healthcare system is the size of the GDP of India. And the size of the Indian healthcare system is the errors in the payments in the US. So it's actually, while we have 4 times the population. So we actually have a very small healthcare system for the people that we have. And that's some of the points that folks have been making from the supply side. The issue that comes up then is if you're a startup and you have to go through all the hoops of regulation and all that kind of stuff, and your end market is so small, what do you do? I mean, and as an investor, are you going to put your money in that startup? So what ends up happening, and Ranjit probably has experience in this, is that then you push these guys, why don't you export to the US? Why don't you export to EU? And then they, of course, face challenges with local competitors, right? Which becomes difficult. I mean, there's somebody sitting in, San Francisco or New Jersey or London will find it a lot easier than somebody sitting in Bangalore. And so that's a problem, I think. I think the other thing is that we don't have a strong government spend, we don't have a strong insurance coverage. Most of the folks are not covered. So what that means is nobody is able to take a 5 or 10 year view. So if you have a diabetes device, if you have a device that's going to actually help your health for 10 or 15 years, increase compliance, it's not worth it because the guy will have to pay out of pocket. He'll have to pay 1 lakh, 2 lakhs, 3 lakhs out of pocket, and he simply cannot afford it because nobody is willing to finance it and take a long-term view. So at least in my view, I mean, those are some of the very real challenges, which is why medtech in India, I think it's extremely challenging right now. And apologies for interrupting, but it's something that I felt strongly about.
I think it's a very valid concerns, Bhuvan, from your end, and these are real challenges that we also see when we are interacting with health innovators, be it manufacturers or be it technology innovators. These are the real-time challenges that they are facing. But as KKR is kind of one of the leading investors in the healthcare space within the country, how do you see, what kind of models are you looking at, and how are you trying to address some of these challenges? Is it a longer investment period that's required or something else?
Yeah, I think there are some things that we are really, really good at, right? And so we have tried to figure out what those are. So as an example, we are really good at low cost manufacturing. We're a little bit of the pharmacy to the world, right? We supply 30% of the US pills and medicines by volume. And the reason for that is we actually do a really good job at good cost and good quality. We can provide both of that. So that's a theme that we've spent a lot of time on. The other one is actually providing services at scale. So I wouldn't call it services at lowest cost, but there is a services at scale that we are able to provide. Right? So if you look at a Narayana or somebody, you look at medical tourism, people do come to India for transplants. It's those are difficult things to do. Yet folks fly into India to get it done because when you look at cost and quality, it is worth doing, right? Orthopedics, even heart transplants. I think some of the opportunities going forward will be around, as folks have pointed out, domestic pharma, how it's going digital. So, there are many large pharma companies which have 5,000, 10,000 people in their sales force. Those guys obviously were not able to go and meet the doctors, right? So typically when you go meet a doctor, you'll have 3, 4 of them sitting outside. That was not happening over the last few months. So I think there's been some innovation around how do you reach a doctor, and hopefully that sort of continues, and that's a higher quality engagement for the doctor. Because I think one of the things that is required is that we do have a large variability in the quality of the doctors and the continuing education of the doctors. So if that can be sort of aided by some of these private companies, I think that's probably helpful. And telemedicine, of course, has been around for decades. Nobody is bothered with it. But finally, it seems to be catching on a little bit, and so hopefully some of that sticks. At least my personal experience has been that there are, not the multi-specialty hospitals, but some single specialty hospitals like eye hospitals and all, which have been able to do consults over telemedicine and get back to the number of consults they were doing pre-COVID, which is quite heartening. But it's pre-COVID, but it's all online. So I think that's quite heartening. I think some of the issues that that come up. One is, and again, want to be a bit provocative, but with all due respect, I don't think we've been very innovative in delivery or in products. So if you look at 10 years ago, there was a lot of buzz around India will figure out the low cost, high efficacy delivery model for healthcare services. And at least from where I sit, the only folks that have been able to do this, and this is well known, are the eye care centers, right? They've just done a fantastic job. But other than that, I mean, you have here and there. So, as I look at scale, I would look at, again, Narayana, it's well known, so I'll use that as an example. But even Narayana today, that's the mission, but that's not how it's able to sustain itself, right? It also has to provide high quality healthcare so that other folks come to it, so that they can cross-subsidize to folks who are not able to afford it. So I don't think we've figured out this low-cost healthcare delivery system, which is what was promised to us 10 years ago. Same thing with innovation. We spoke about it. The market is extremely small from a product perspective. I think people struggle quite a bit. There are, and you can see that, right? You can see that in basic tech. You can see that in med tech. Folks go from here, they go to the US, and suddenly they have a startup. 5 years later, it's highly successful. So it's the same people. It's just that the environment today doesn't seem to be very conducive. And then the last concern for me is really quality, right? We just seem to be focused on cost, which manifests itself a lot of times with price caps and things like that, but not quality. So, when Bottle of Lies came out and everybody said, oh my God, it's so terrible, and look at all the bad things these people are doing. The reality is those were actually US FDA sites where these things were manufactured. And in general, those sites in India are 5 times better than the average oops, sorry, I got disrupted for a second, that you or I would be sort of taking pills from, right? So we do need to increase our quality standards quite a bit going forward. So those are some of my concerns.
And thanks, Bhuvan, for the overall perspective. And you were right when you started saying that manufacturing is something that India has done well and has the cost economies, and that's also reflected in the last 6 months investments. If you were to see in the healthcare space, pharma manufacturing has received the maximum investments in the country. And some of the concerns that you mentioned about quality, lack of innovation, or the rice pricing models is something that one kind of remains challenged today. That brings me to you, Charles. Quis has been working on a number of funds and debt investments in this space. Do you also come across similar challenges, or what kind of investments or tech investments have you been focusing on? And if you can throw some light on those, and how do you see the sector moving forward?
So I fully disagree with Bhuvan. I think on everything he says, I hold the absolutely different and opposite view of you, Bhuvan. And I'm happy about that because I think we operate in different spaces. So because I'd run a pharma company in India from 2007 to 2010, which when I saw that most global healthcare companies were working and global Indian pharma companies were working on the 20% richest, and that the needs were lower, I came back to India in 2016 to set up a blended finance team working on healthcare access, and then a fund, Health Squad, in joint venture with Quadria to invest in high quality, low cost, low capex solutions that would improve access to healthcare for the 50% poorest Indians. And we've actually seen that has generated tremendous rewards, both in terms of improvement of healthcare access and financial returns. And the reason is just that I think that India has the most brilliant global ecosystem, because what you mentioned earlier on in this presentation about the 600 million Indians who don't have access to modern healthcare is actually the case of probably 2.5 billion humans on this planet. But nowhere in the world is there an ecosystem that's as vibrant as India in terms of quality of entrepreneurs, number of entrepreneurs, quality of coders and reverse engineers. So on affordability, we focus, in order to solve affordability, we focus on automation, insurance, genericization, and centralized models. In accessibility, which obviously is a big issue for a large part of the rural population, we've invested in telemedicine, in point-of-care diagnostics, in home healthcare, and patient awareness programs. In order to improve quality, where India is still ranked number 145 by WHO, we're looking at digitization of health data analysis, structuring of patient treatment pathways, quality-based incentivization. And then finally on the inefficiencies, there's a lot of them, with 85% of diagnostics and the distribution industry that's still unorganized in healthcare. There's a huge amount of improvements in supply chain management, data digitization, and demand channelization. So a few examples. First, on the healthcare delivery side, we've invested in a urology and nephrology company, AINU. So the founder of the company was trained at Narayan Health, was convinced that Narayan Health could be replicated in nephrology and urology, and he did so. So their services are 30 to 40% cheaper than those you would get at Fortis, Max, or Apollo. The quality of care is comparable, and the return on capital per unit is close to 30%. Same thing in maternal care. While many in maternal cares failed or are not performing well, Ovum that we invested in Bangalore is doing remarkably well. And then we also invested in the largest single multi-specialty hospital chain in UP, Regency. And there, it's the whole multi-specialty ecosystem that's designed to be low cost. And obviously, each of these need to work on digital outreach to patients, patient flow management inside. But then on the digital side, we've invested in THB, the Healthy Billion, who have patient data on 45 million patients, and they're adding 5 million a month. And that data is analyzed and then sold to health insurers to help them decrease the cost of their health insurance as they understand better medical credit risk. And they've also offered a huge amount of support to pharma companies who wanted digital reps, and designed during the pandemic and the lockdown, a solution for reps. Medica Bazaar that we've been investing in has been supplying more than 250,000 SKUs across the whole of India, not in 3 weeks as a bricks and mortar distributor would do, but in 3 days, and 30% cheaper than a distributor. And they're supporting those small clinics and diagnostic stores with an AI tool that allows them to better purchase. So I think that through that, you're seeing tremendous improvement in the supply chain and the quality of care that finally those clinics and hospitals and diagnostic stores can provide. And then finally, on the e-diagnostic side, we've seen a huge upsurge during the crisis of neurosynaptics offering that was rolled out in more than 3,000 rural areas, allowing any patient to have access at the tip of their fingers to 40 metabolic data points that were then sent to a doctor who could then give the right consultation to them at a distance. So I think that yes, Bhuvan is right in the sense that it's not been easy for the very large companies to adapt their models, although some of them are embracing it. And there have been numerous challenges, be they regulatory, be them the absence of a strong payer model, be it the logistics issues. But on the other hand, I think that we're seeing a remarkable number of innovative solutions that are coming through and that have potential way beyond India. It's actually quite easy for these companies, once they're successful in India, to export to Africa, where prices per intervention are very often twice that of India. So I'm enthusiastic, and LPs are as well. They've had more than 45% IRR on our first fund, and that's why we've done the first close of our second fund above the expectations that we had. And these are small numbers, 70 million. It's definitely not the size of transactions that KKR would look at, but might look at the size of the transaction, but surely not the size of the fund. But the final fund will be significantly larger than that, and the growth that we're seeing in that space is tremendous.
And Charles, what do you see as the sort of challenges for these companies to become, 10 times, 20 times their current size, or 50 times, right? Because I think all of us would just love to see that.
Well, I'm dying to come and see you with one of them that will be 10 times larger. There are a few that have generated 10x from the day where we invested, but that's probably not. I think it's really so. We are looking for companies that go into that have models that are not going to come into the regulatory issues that there are in India, and that are not going to suffer from the absence of deep payer models, and so that are looking for solutions that the patients can pay for, or that a corporate in the value chain will benefit from, or a series of corporates, and that have a capacity to execute. So for most of them, like for most companies in India, it's really a question of execution. And if I could just increase massively the OPEX, which I'm trying to do now because there's a lot of space in the talent pool now. But I think that if we can really just attract the best operators in these companies, they will scale. and that's the major issue. Now, I'm not telling you that in UP it's damn hard to operate, and regulations always come and approvals always come late, and yes, we've definitely lost some time according to our plans there, but overall, I think that quite a few of these companies are going to be multi-billion companies, and that they will soon be at your size. When we started working on this space in 2015, nearly all global investors thought we were nuts, and that you can only make money in healthcare with the wealthiest patients. And we said, no, the technology is perfectly designed for personalized, low-cost, quality care distributed to a massive volume, and hence to be profitable and an attractive investment. And nearly none of them believed us. And now MSD have invested in the fund. TIA-CREF have invested in the fund. Sweat Fund have invested in the fund. And we're in discussions with loads of others. So I think they're recognizing that there is just a huge need. It's inhuman to continue having only the wealthiest who are properly treated. And from a scientific perspective, the science is there, so the technology is there, the medical science is there, and so the only thing that's needed is more capital and more business skills. And these are two things that are actually quite available. I mean, the fact that Bhuvan is excited about it, you're going to see in 2 years' time, it's going to be solved.
I think it's a key area that we all need to look closely at, given that social enterprises is something that require the most support in a country like ours to provide the services at a affordable manner. Pompey, Charles mentioned Merck making some investments into the fund, but do you see that as a model for Merck, or do you also see other ways in which you can leverage social enterprises as a corporate philanthropy to integrate them better with the health services and help them scale their operations?
Okay, thanks. I think this has been a very interesting discussion, and what we see our exit in terms of what we do under philanthropy in these social entrepreneurs. And India has the right ecosystem. At the end of the day, unless healthcare is going to be of good quality, the market will not sustain. And we've seen that. At times, unfortunately, universal health coverage and in various avatars have been blamed for quality nosediving. So I really urge that, local private providers are integrated, because we do need to expand the availability of healthcare services, one of the pillars of, universal health coverage. And we need to address equity issues, and we can do that by bringing in local private providers. And believe me, these guys are social entrepreneurs. We've seen them put in capital, we've seen them create markets and take up and adopt so quickly that they can really complement the public system and also help government create that fiscal space. So we are investing, as you just heard, with several funds, and that is the way forward for solutions that are kind of baked. But yes, we do believe that the local private providers and the social entrepreneur system needs support at this point, and we're happy to do that.
Thanks, Pompey, for that. I think that the discussion then takes us to the next level, that where do we see the challenge in getting the right kind of capital into the healthcare innovation space, be it for the providers or for the manufacturers or for the innovators. Karthikeyan, you have been looking at the healthcare space and also looking at a lot of debt investments in this space. How do you see that? What is the key restrictions for the flow of capital to be social enterprises or healthcare in general? And how do you see that those challenges can be addressed?
Thanks, Himanshu. I think it's been a very, very interesting discussion so far. I think Going back to Bhuvan's question of how can these companies grow 50x, I think one of the answers is definitely capital, and specifically debt capital, which can bring in a lot of efficiency for a company which is growing. So if we really see across the healthcare value chain, different segments of the value chain have different set of constraints. I think Ranjit clearly pointed out the problems faced by medical devices manufacturers. It's a lot of R&D that needs to be done. Even today, the Indian companies are largely on the consumable side. They need to go up the value chain. So that requires a very, very detailed understanding of the business model. So I think debt funding is a little bit of a far cry there. But on the other side of the healthcare value chain, in the delivery or diagnostics, we are seeing reasonably good penetration of debt. But still, have we reached the potential debt levels that these companies can take? The answer is no. I think the IIC's Bridge Gap report, which was released on this forum a couple of days back, very clearly pointed out that there is a huge gap between the debt that is there on the balance sheet of these companies vis-a-vis the potential debt which these companies can probably pick up. And healthcare is probably the third sector in that pecking order. I would kind of highlight a few generic specific reasons inherent in the healthcare business models. I think understanding these reasons itself can help us understand the solutions. So first of all, I think the healthcare delivery business especially has a pretty long gestation period as well as payback periods. So which means that these sector companies would require a pretty long-term funding, especially the greenfield ones. RBI did a very effective step of including healthcare into the infrastructure lending definition way back in 2013. But still, we are not seeing too much of a offtake on long tenor loans. Only those very highly rated companies are able to probably tap this, say, a 10-year plus kind of a product in the market today. Otherwise, what we are also seeing is that the business model itself has certain constraints which may not be there in some of the other businesses which the traditional banking or the NBFCs are used to transact with. Typical thing would be the working capital cycle. So most of the B2C healthcare companies have a negative net working capital cycle. So a company may not be able to get funding from a working capital lender because they may not have a drawing power under MPBF. But that doesn't mean that they don't require capital. They do require capital to fuel their growth, expansion, and other aspects of their business. Similarly, the companies which have been catering to government schemes generally have very stretched receivable periods, which again will deprive the companies of their drawing power. But I clearly pointed out that things are changing in the current scenario. We are seeing the receivable periods coming down. That's a definite positive. We are also seeing that on the field. So these are some of the reasons which leave these healthcare companies with very limited debt funding options, mostly the term loans. And again, when we talk about term loans or term facilities, the tenor is definitely constrained because of the banking system's inherent ALM issues. So let's look at the other aspects of the healthcare. Size is one thing which is something which is completely misunderstood by the lending community as far as healthcare is concerned. Let's take an example of a 500-bedded hospital, which has an average revenue per operating bed per day of about 6,000 rupees. So 6,000 rupees is a huge sum. To give you a perspective, I think this would be around 1/4 of a Apollo or maybe a Fortis or a Manipal. So maybe a tier 2 town hospital. So this kind of a hospital, 500 bedded, is a very, very complex healthcare business. Not many promoters will be able to do it. But if you look at the top line of this company, this would be around 50 to 60 crores. And when the bankers apply their top line filter, this particular company will land up on the desk of a MSME credit appraiser who may or may not have the models to understand, appraise such a cash flow system, and may not be able to give them the right kind of a credit product. So some of these conceptions or misconceptions of the existing banking system is something which is really constraining the flow of capital, especially debt capital into healthcare system. Even other things like your concentration risk, for example, even for a large group like Apollo or a Fortis or whatever, I think you might have one or two centers contributing to a large amount of their revenue and a pretty large amount of their profits. So that again limits the debt capital providers to take exposure beyond a certain limit. So because of the concentration risks. So these are some of the typical reasons that we see in the healthcare space. I think at Vivriti, our corporate debt platform, Credivenue, I think we've been able to address some of them. I'm sure a lot of others are also working in this area, as pointed out by the panelists here. So some of the things that we were able to do is to help these companies to diversify their pool of capital. So in some of the cases, we've been able to come up with innovative equipment financing schemes that help companies to unlock capital and reduce leverage. It's a kind of an off-balance sheet arrangement. In some cases, we were able to help the companies raise supply chain financing or working capital financing, irrespective of where they are in their ramping up phase. So many of them are still in the EBITDA loss or PAT loss phase because they are still in the ramp up phase. But still, we were able to help them raise working capital, supply chain financing solutions. Not just with one partner, I think we've been able to do that across banks and NBFCs through the platform. So I think some of these problems are already getting addressed, but I think a long way to go. I think there is a concerted effort is required between all the parties, government, banks, private capital providers, and the promoters to come up with a much different set of models which will help this sector to attract quality debt capital. Manchu.
Very rightly said, Karthikeyan, and that's also what we come across organizations, be it manufacturers, having ready work orders, but not having the working capital to service them, and that's been a challenge in the sector over the years. And especially when you look at the last 6 months, when the footfalls fell in the hospitals or service providers level, a lot of different kind of working capital challenges also emerged. So availability of debt capital is something which is very key. But you also mentioned about the long gestation period that is required for healthcare investments, and that kind of brings me to Ashish. Ashish has part of CDC, which is kind of a part sovereign body. How do you see these kind of challenges, gestation period? And you have been CDC has been doing both grant, equity, and debt investments in the healthcare space, and possibly I think so. If you look at direct and indirect investment, would be the highest investors when it comes to the Indian healthcare space. How do you see these gaps and challenges and way forward for them?
Sure, Himanshu. Can you hear me? Am I audible?
Yeah, sure. Yeah.
Thanks, Himanshu, and thanks for setting up a very interesting discussion. You're right, CDC, I mean, probably by breadth of investments is probably one of the largest investors in the healthcare ecosystem. Investments in Narayana Hrudayalaya, Asian hospitals, care hospitals, Rainbow, Dr. Agarwal Eye Care. We've done partnerships with HCG for oncology in Africa, partnerships with Manipal for early stage healthcare in hospitals in Bangladesh. And then we also have a funds business through which we invest in early stage funds who then invest in healthcare technology and health tech ventures. We don't do grants, unfortunately, much as you mentioned, but in combination of impact and commercial, we've tried to do. I think to set the context and to answer your question, we first probably help explaining how we look at impact, right? As where we are an impact investors forum and how we look at impact in healthcare. And when we started doing this, we sat down with the Imperial College in London, and we came up with really 4 factors on which we measure impact of our investments. And that's quality, that's access, that's workforce, and that's stewardship. So we're looking at quality, which is just how well are the enterprises that we invest in treating their patients. But then beyond that, we're looking at what's the broader impact that they're having in the healthcare ecosystem. Examples of that are, and I think Bhuvan spoke about Narayana, and that's a classic case of access where they've been able to provide cardiac care and tertiary care at probably one of the lowest price points in the world. So that's you take them to other parts of India and create access. When we look at workforce, and it's an important part we look at in all our investments, can we really train, set up nurses training and paramedic training through them, and be net positive contributors to the healthcare ecosystem. So that's something we look at. We look at stewardship, which is, really is the enterprise growing what's expected of it and really going beyond in that field. So if you look at Rainbow Hospital and what they do in pediatric and neonatal care, they're really, setting or bringing global standards in terms of, delivering premature babies, blue babies, etc. So we're looking at all of that. And your question was around changes in funding, etc. I mean, just to give you a context, we speak about the size of the sector again. Bhuvan gave some statistics. Our estimate is just for core healthcare services, secondary, tertiary, quaternary, maybe some part of primary healthcare, the country needs about $32 billion of investment. Okay, now if you could now compare that to, and we looked at how much private equity and other forms of FDI capital have come into only healthcare in the last 10 years. It's $4 billion. We then split that $4 billion into how much really gone as primary investment to set up beds and clinics. It's $1.4 billion. Right? So the numbers really start shrinking as you keep slicing and dicing them. And then to come to your question, right, which is, this crisis and, how is it changing access to finance? I think it's made, this was known, but it's made all of us wake up to the fact that the sector needs long-term capital and it needs flexible capital. When COVID hits and occupancies decline, you cannot have, and we've seen a lot of our hospitals and otherwise, tons of them. On the one hand, they're dealing with PPs, they're dealing with, doctors, they're dealing with clinical loads, and on the other hand, they're not able to make bank repayments and they're negotiating with banks. It's just unfair on the sector. And we realize it's a capital heavy sector, right? So it's capital heavy, you will take lots of leverage to expand, and I'm talking of core healthcare services. And so, these challenges will be there. And, just the need for long term, just the need for flexibility is just staring us in the face, and it's very, very stark. I think operating models will change. As I said, this is high fixed cost. And, that's got to change what this crisis is making operators understand. So, there are minimum guarantees, there is lots of staff, there's lots of other fixed costs. And if you just see, in a short span of 4 years, we've been through quite a few events in healthcare services. There were sectoral price caps, there were other interventions, there's COVID. So just the number of shocks that we're exposed to is increasing. And, the cost structures are not changing. So I think cost structures will change, but they'll have to, and we're seeing some of that happen, and thus investment models will change. The third, we're seeing just more financial innovation come in, and we wish there were larger institutions and more institutions doing that, right? So you need sometimes, that, hospitals in tier 2, tier 3 towns will have longer break evens. You'll probably have some which make money, some which don't, and you'll have to cross-subsidize them. So you need big instruments to do that. You need more specialized finance. You need a combination of grant and commercial capital to maybe drive impact. So we're realizing that. The other thing we're realizing is this, all of these crises throw up consolidation opportunities. There are a lot of weak players who are emerging, so there is the need for consolidation capital also to come up. And consolidation is not always a bad thing because you consolidate it sort of creates scale. It also creates a lot of resilience with the enterprises within emerge. So we see the need for that coming up. I think Ranjit spoke a lot about the capital which is coming in health tech. I think it's not enough. A lot more is needed just because of the scale of impact it can create. That's needed. The last, I would say, and we've not spoken about this, whenever we look at any healthcare model and you dice, the core pain point is just the availability of talent, which is doctors, nurses, paramedical. And we've still not opened up the medical education sector to be able to attract, huge forms of private capital. And that's really, where you sort of hit the problem really at its core, where you can really attract formal, organized capital into medical education. You'll solve the mean supply constraint. So I think that's my answer, Himanshu, on what's needed in terms of financing.
Thanks, Ashish, for that overview. And it's really kind of emphasizes the overall need for financing for the sector. What you mentioned, that be it debt capital or equity capital, it is required, and the level of the scales that we want to reach requires more and more investors coming forward and investing in the space. That kind of brings me to you, Loret. You have been a patient listener, and as I understand,
sorry, Himanshu, I think Charles had a question.
Sorry, I didn't see that. Charles, you want to ask the question?
Thanks a lot, Bhuvan. I just wanted to underline how important the point of Ashish is of the need to align all different stakeholders in the healthcare value chain if we want the revolution that's ongoing to be accelerated. And Ashish rightfully mentioned that it's only when public and private sector, when philanthropic and for-profit capital, as well as concessionary capital, when for-profit and non-profit enterprises and of large scale and small scale collaborate, all unified by one single outcome, that's a healthcare improvement that is really very well defined and to be measured, that can happen. And that's why at Choice we have, on one hand, investments in healthcare technology and healthcare innovations, and on the other hand, blended finance. Because only through these blended finance instruments, as Ashish rightfully said, can all parties be aligned and bring some changes that the best healthcare tech companies or the best healthcare delivery companies are only going to be able to do in a very limited and siloed manner. But that if you want that to take place really at the bottom of the pyramid, it has to be with financial products that are designed as a tool to bring all these parties together. So sorry for interrupting you, but I really felt that the point of Ashish was so relevant.
Yeah, very, very clearly pointed, Charles. Yorit, from your perspective as FMO, part of FMO, the Best Development Bank, how do you see, like you've heard the government, the bilaterals, the corporates, as well as your fellow investors, and somebody who is not like or was looking closely at the healthcare space as a potential investment arena, how do you see the discussion and how do you see the challenges that are there can be addressed, and what would be your perspective of making your investments into the healthcare space in the country?
Yeah, thank you very much for that question, and also thanks for the interesting points which were raised by the others so far. It's been I've learned a lot. But prior to this panel, I've done a little bit of research into our systems with regards to the amount of investments that FMO has already made into healthcare. To put it into context, FMO has exposure in 84 different countries in emerging markets across the world. So you would expect quite some healthcare exposure there. Also, if you zoom into India, which is our largest exposure in terms of funds coming from our own balance sheet, at this moment we've got about 500 million euros deployed into India. About 300 in debt products, about 200 in
Yorit, we can't hear you. Hi, Yorit, can you hear us, please?
Sorry everyone. As we talk about head technology, I think so. There are some improvements that are required on the video calling as well in the country, but that's fine. So I think so. We
I'm
had
not sure if the technology roundtable is not done, then you have something to talk about there. So.
So I think so. We had a great discussion today, and different perspectives, different areas being discussed. There are a few questions that have been coming on the chat, and I will just try to kind of see. I think the first question that's coming for the investors, and I would ask maybe Bhuvan or Ranjit to take it up, is your investment thesis work focused on the current gaps observed in the health tech space, or does it take a longer term view in terms of India's need? And I think so from the second perspective, it could also be Ashish who could address and how much is India's need being looked at when you're making your investment thesis vis-a-vis the requirements of the sector.
Yeah, I can just give a quick answer to that. Our mandate is really on the impact investing side. We have an impact investing fund, and that mandate is really to do both P style, P returns type of deals, but also those that have an impact angle. So we would have to look at both India's need as well as the returns, and make sure that both the criteria are satisfied.
From our side, I think we are, like I said, 10-year asset class, so we have that view. Having said that, it's also important to make sure that investors see capital back. So it's a combination of both. While we see opportunities that are relevant today, but we also are looking for opportunities that are relevant, 5-6 years from now, when exits potentially can happen. So I think that's the view that we will have.
Sorry, Manju, what was the second question again?
So basically, looking at India's needs, how much focus is on India's need vis-a-vis the when you're making your investment thesis for the country?
Well, so CDC only invests in South Asia and Africa. These are the two large geographies we invest in, and that's because 2/3 of the world's poor population lives in these areas. And then within South Asia, just given the size of India and the means, obviously a very large portion of our capital flows into India. And that's been true of healthcare as well. The other thing I would add, I mean, as an organization, we look at crowding in private capital rather than crowding out. So if there are areas in healthcare which are relatively mature, where there's enough private capital, that's not an area for CDC. Where CDC can play a role in leading, some capital which can then crowd in further private capital, that really scores high for us.
Thanks, Ashish. Varun, there are a couple of questions for you. One of the things that one of the audience members wants to understand is the rollout of National Digital Health Mission. When can we expect that to happen, and will that include access to healthcare for the masses, or how will that enable that?
Well, so, if you look at the current status of the National Digital Health Mission, it has been rolled out in 6 different union territories, and it is right now, more in a pilot mode, wherein the idea is to understand, what is the implementation effectiveness of the, different core building blocks which have been rolled out. So there's been a lot of monitoring that is happening with regard to, what is the type of user experience, how effective is the system, what are some of the gaps that we need to bridge in before actually scaling it for the entire country. So I think there is a lot of feedback, there is a lot of I would say learnings that is happening from this particular pilot. In terms of one more very interesting aspect which is also happening in the National Digital Health Mission is actually the NDHM sandbox. Right from the time that NDHM has started its pilot, NDHM has also created a sandbox, so that any type of digital technologies or any type of digital disruptions can actually apply to that sandbox model and can test the NDHM environment. So as I said before, that we want the private sector to come ahead, come forward and build services. The idea is that they can test this NDHM sandbox, they can test this environment, and they can start aligning their particular services to this environment. So here also we have received I would say quite an interesting response Along with completing the pilot and starting to scale up the NDHM across different parts of the country, we are also looking at ensuring that the technologies which have come to the sandbox, they can be evaluated and they can be certified, so that those services can also be started to be built on the top of the NDHM core building blocks. So that is the whole idea behind the NDHM implementation.
Thanks, Varun. Yorit, welcome back. Unfortunately, there was some tech issue earlier, and we couldn't hear you. But besides, answering my earlier question, if you could also kind of cover another question from the audience, which wants to understand how the economies of investments have changed because of COVID. So, if you could also kind of put some light on that answer.
Yeah, well, I'll try, and hopefully we won't be interrupted by technical issues anymore. As with the economies of COVID, at this moment, the economies of COVID have only had a very negative effect on our portfolio. So we've seen our portfolio shrink with about 12% in value, and this is a global portfolio. Obviously, that's looking back a little bit. Looking forward, there are some interesting trends to see in how some of some of our investments have been developing. So what we've seen, for example, is that some of the tech investments that we've done are actually doing quite well, while some of the investments we have in the hospitality sector obviously are not performing as originally anticipated. So how will COVID affect our investment strategy going forward? I think we will, going forward, always take the impact of these pandemics into our into the business case and see and try to anticipate how the investment would respond to such an event. And there you see that anything which at this moment which seems to be tech related seems to be more resilient than some of the old traditional economy investments that we've been doing. So that is in short the answer to your question. And the only thing I would have to add is that it's also a work in progress. So we're still evaluating as we go, and hopefully we'll get out of this a little bit smarter.
Himanshu, you're on mute. We can't hear you.
Sorry. Thanks a lot, Yorit, for that perspective, and it's useful to understand how COVID, and I think that's going to impact each and every investor, be it equity or debt investors in the country and in the healthcare space. Unfortunately, we are kind of reached the end of the time allocated for this session. While there are a lot of interesting ideas or interesting follow-up discussions that I think each one of us would want to have, maybe we will need to kind of connect in alternate forums to do that, and we definitely look forward to kind of connecting further and discussing those. Thanks a lot again for your time today, and to the audience for listening in and for raising very pertinent questions. Over to you, Neha.
Thank you, Himanshu. Thank you for such an engaging moderation. And thank you very much, panelists, for such an insightful discussion. We have indeed entered the digital age of healthcare. On that note, we hope you and your families are safe during COVID. We now move on to the final session of Prabhav, Tech for Good, our final discussion with yet another illustrious panel comprising of veterans from different walks of impact. Please do also join the IIC team and our board members for the closing ceremony of Prabhav at 8:15 by the CEO of IIC, Mr. Ramraj Pai. Thank you and good day. Over to you, Ranjana. Thank you, everyone.